Who leads in a fragmented world? Welcome to the call. I'm Jay Sapsford. A week after the IMF annual meetings, the growth numbers look steady, but the foundations are shifting. Major powers are rewriting the global order built on open markets, shared rules, and trust. Alliances are stressed, trade is weaponized, and globalization, well, it seems to grow a little less global every day. So, our question this week is simple but fundamental. Is America's global leadership at risk? Joining us now is one of our elder statesmen who helped create the system now being tested. Robert Zoellick, chairman of the Americas at Temasek and former president of the World Bank and U.S. Trade Representative. Welcome to the call.
Thank you. Although elder's adjective you didn't need here.
uh, Bob, I wonder if we can start with the assessment of the Trump administration's trade policies.
Well, good to be with you, Jay, and good to be with the chamber. I think the key thing, Jay, is while people read all the news of negotiations and agreements, I wouldn't expect a steady end state. In other words, the merry-go-round is going to continue. And it's because President Trump likes to use tariffs as a tool, as a form of coercion. So if you listen to him, sometimes it's about trade deficits, sometimes it's about closing markets, sometimes opening markets, sometimes revenue, sometimes doesn't like the judicial system or fentanyl. And so people need to expect that this is going to be an ongoing part of the next 3.5 years. As for the effects, I think while the circumstances are different, some analogy to Brexit is not too far off. And what I mean by that is when Brexit was coming to pass, many people thought, well, this is the end of the British economy. Well, not really, but it was a slow grind. And so I would expect you'll see some pressure on prices. You'll see some lowering of productivity, some misallocation of resources, and more costs. About 50% of U.S. imports are used as inputs for U.S. industries. And so I think this will be something that'll wear down the economy over time, but there'll be other aspects of the economy like AI that keep capital investment up.
Now, you've made comparisons between the Trump trade policy and the Biden administration's policies. And I wonder if we might be able to touch on that as well. It's very interesting to see the comparison.
Well, both of them have been protectionist. So now you've had 3 presidential terms, 2 presidents of both parties that decided to defend higher tariffs and breaking from an 80-year practice. That's one point. Both of them have various forms of industrial policy. Biden used a bunch of subsidies. Trump is using some subsidies, but he's kind of using executive power and overreach, whether it's changing the Intel loans into a form of investment, the golden shares with U.S. Steel. So you look across, and both of them have both relied on subsidies, protectionism. And I think the key point is it's a Washington-guided economy. Whether it's from the Democrats or from Trump, they want to be deciding using the Oval Office, the direction of the economy. I think that's a fundamental mistake because I think the genius of the American economy is in the private sector.
You were recently quoted in China's Global Times saying the following: "We should take China as it is, not as we wish it to be." What did you mean by that?
Well, if you go back to U.S. relations with China, really from the Empress of China going in the 1780s with Ginseng from Appalachia, there's been sort of 3 themes of American policy. One, the commercial dream always shimmering just over the horizon. I have a book in my basement titled 400 Million Customers from 1937. So this idea about China was always going to be the great economic opportunity. Yes and no, always some disappointed. A second theme is China as a power or potential power. And this really goes back again to 1900 during the Boxer Rebellion. The Secretary of War, later Secretary of State, Elder Root, thought this would be a tragedy like the breakup of the Roman Empire. And then you had the efforts in the 20s and 30s with the Republican China. FDR thought China would be one of the sort of 4 policemen of the world. Back with Nixon, coming back with the opening to China in more recent years. So China is a power or potential power that influences the system. But the third one, which secular societies often forgot, is the importance of missionaries. Missionaries were the window on China. A lot of our diplomats, founders of Time magazine, Pearl Buck, who wrote this very powerful book, The Good Earth, made into a movie, won various prizes, was based on the notion of trying to convert China to Christianity, capitalism, and small r republicanism. And the reason why the missionary influence is so important is that when you're trying to convert somebody and they ultimately decide to reject it, it's an even harsher sense because you feel you've tried to offer something. And so my point with these three themes is that while they've influenced sometimes the romanticism about China, but also the hostility. And so when China resists, as it did in the Moxer Rebellion, or it did in 1949 with Communist China, 89, there's a sharp pendulum of switch. And so my point with that quote was, China is a power in its own right. It's a different political system. It's an important economy. We have to take it on its own terms, just like it has to take the United States on its own terms. I'm trying to move beyond some of the emotionalism on both sides about China.
Well, as the son of missionaries born in Japan, I sympathize with and your comments really resonate. I've got a question here from one of our members here. Do export controls contain China, or do they merely give them an incentive to match our own capabilities?
It's partly both. I mean, as the questioner suggests, export controls can be a useful tool, but I've always warned that don't expect that it's going to stop somebody. It may give you a few years of advantage, but you can see, for example, with semiconductors, China will develop its own capacity. It'll take a while. You can see with AI, the development of DeepSeek, an alternative. So export controls are part of the toolbox. In my view, they've often been overused. And it's important to recognize, as you now see with China using export controls with minerals, both sides can play the game.
So that is contributing to a fragmentation of the global economy. You've warned that the global economy is splintering into separate systems in trade, technology, and finance. Walk us through what you see as driving that shift and what it means for how economic power and global leadership will work in the years ahead.
Well, the starting point really is the US, as your first question suggested. United States helped create this alliance and international trade financial system over the course of 80 years. We believed it was in our self-interest, and I believe it was as well. But at the same time, it benefited others. So it was a win-win concept. I mean, the fundamental view of the Trump administration on trade and international economic issues is zero sum. If one gains, the other loses. Uh, People in the business world understand you do transactions with people, both of them have to find some sort of common interest in this. And so the United States has fragmented a lot of the system, of the rules based system in trade, helped a lot of our exporters. Now that's much more transactional given the Trump style. And so others are working around the system. China as an economic magnet of its own. China has its own big problems, but undoubtedly, when you look at its trade account and investment, it influences various people. So we're at the edge of a system now that is breaking apart in certain ways. It'll lose various efficiency, but there are also links that we're going to continue. If you think about global capital and trade flows, it's not going to go away.
Now, there are some who are raising the flag of national security, and you kind of get the impression that they're just using that to avoid competition. On the other hand, some of the competition that's coming out, particularly China, but elsewhere, are heavily subsidized, and strikes a lot of us as unfair. I wonder what your thoughts are on that trade-off.
Well, you touched on two different points. One, obviously, national security has to be a priority. But you can also, as you mentioned, overuse national security. So frankly, in my experience, I remember companies saying, "Well, we need to protect moleskin producers so that soldiers have moleskin." I mean, it's the favorite tool of everybody who wants protection. Notice we're now protecting against our allies as well as against China. So that's kind of a handy all excuse. In particular, I think as the administration may lose this case before the Supreme Court based on IEPA, the International Economic Emergency Powers Authority, you can see they're using the what's called Section 232 National Security Authority sector by sector. So it's certainly vulnerable to overuse. My view is your greatest national security is a strong, resilient economy. That would actually start with some of our debt. So whether it was Biden or Trump, they're both spendthrifts, and our debt as a percentage of GDP is now about 100%. That's about this close to the peacetime high in 1946. And that's a source of resilience for an economy. The interest we pay on our debt is now exceeds our defense budget or Medicare. So, in my view, frankly, the strength of the U.S. economy is through its openness. Frankly, if you think about a lot of the innovation, we've drawn immigrants from around the world. So, I believe borders have to be under control, but open immigration policies, particularly for the H-1B, would be sort of a plus. So openness to ideas, to capital, to trade. I understand the frustrations with the woke agenda in some universities, but this attack on universities and science and development has gone way too far. So national security has different dimensions. Now, one other piece on the trade side was that one of the successes of the U.S., as I mentioned, was the win-win concept that we and our allies, Japan, Europe, Germany, Southeast Asia, everybody can benefit from the system. The Trump approach of raising tariffs is to block that and to, frankly, negotiate government investment pacts, and those tend not to work so well. So it's not that one side that the Trump administration can claim, well, we're for national security and free marketers weren't. I worked with Secretary Baker at the end of the Cold War. That worked out pretty well for us as we unified Germany within NATO. So I don't believe that, frankly, closing the U.S. off is a plus. On the other hand, you will have areas, as traditionally, whether with COCOM for control of technology, you'll see this now with the critical minerals issue, where the U.S. has to take steps with its allies to protect its sources.
Yeah, it's fascinating. You mentioned the debt issue. Last week, the IMF came out with a prediction or a forecast that global debt, not just in the United States, but globally, is going to reach 100% of GDP by 2029. What is driving this fiscal concern at this moment? Why are we reaching these sort of levels? It seems unusually high. It's like the highest level since World War II, if my understanding is correct.
Yeah, there's been a combination of forces. So during the global financial crisis, people had big stimulus packages. Then you had this during the pandemic. You've had these extraordinary monetary policies that lowered the cost of interest. There are some people in the Biden administration that said, well, as long as interest rates are low, we can spend as much as we want. Um, in the case of Europe, after the end of the Cold War, they really cut back their defense spending. They built their social welfare programs. Now that they're having to face Russia again, they're recognizing they're going to have to increase their defense spend. Uh, and so this is straining systems. So you see it most sharply in France, where the government share of the economy is about 57%. And you have French bonds that are now trading worse than the credit of AXA, a major insurance company based in France. I, I at the time of the global financial crisis, you may recall Rogoff and Reinhardt wrote this book called "This Time Is Different," and they warned about debt levels. And coming out of that discussion, there was the idea, well, 90% of GDP should be a yellow flashing warning sign. My experience talking with both economists and people in markets is there's no hard number, but you're running risks. And frankly, it depends on markets' belief whether your political system could ultimately deal with the issue if it had to. And you can see this in France, maybe even in Britain. The United States has more resilience, but as I mentioned, if you're certain there's never going to be another crisis in the next 10 or 20 years, you don't have a problem. If you worry about a crisis, you would like to have some cushion.
So, what about the demographic pressures that's going right now? Fertility rates are below replacement level, and I think it's well over half the world's countries right now, and they're falling. Even those that are above a replacement rate, we've got workforces that are shrinking. Is that contributing to the what? How do we manage that going forward?
Well, you're right. Really everywhere but sub-Saharan Africa. I mean, so the U.S. is actually slightly better off than Europe or Japan or South Korea or China. I mean, a sign in China is over the past 5 or 6 years, the birth and marriage rate has fallen more than it did in Russia at the end of the Soviet Union, more than it did during Mao's famine. So there's something going wrong there. Now, the U.S. strength, again, partly was immigration. So if we cut off the immigration flow, we'll be less well off than others. Obviously, this runs throughout the economy. It has effects on pensions and savings and workforce. Even sort of energy of that you normally find in sort of younger people. And One of the big issues, not just for the United States, but globally again, is how does sub-Saharan Africa fit into this? It's striking if you look at US immigration. In the 60s, maybe 1% at best was from sub-Saharan Africa. Now I think the data is about 10%. So you've got a talent pool. And the question is whether you'll draw that in. This brings us to the larger question about it's not just the economics of immigration, it's the assimilation. It's how you bring people into the society. And what most of the data shows is that for the first generation in the United States, people do better, but the real gains are their children. And that's a plus for American society as long as we keep figuring out ways to draw people into the system. I mean, look at Silicon Valley. Look at a lot of the people running sort of the major tech companies. This is a plus for the United States that we're an open society that draws people.
I'd like to touch on the dollar before we sort of wrap up here. A couple of final questions for you. The dollar is a little bit weaker right now. I'm not terribly concerned about something else replacing it as the unit of as a reserve currency, but as a unit of exchange globally. The technology exists now where people can bypass the dollar. I wonder, the dollar's been is a fantastic instrument for the U.S. to pursue its interests and also to maintain peace and prosperity around the world. Is that at risk now?
Well, your question, I think, sort of started to draw the correct lines. I get asked a lot about the dollar, and my primary answer is compared to what? So if you're not going to hold the dollar as international money, the euro, well, about 20% of reserves. Renminbi, it's about 2 to 3% because it's not an open capital account. The reserve level of the US dollar fell from about 70% in 2000 to about 58% today. Most of it went to the Swiss franc, Canadian dollar, Australian dollar. One striking feature is gold. Gold as a percentage of reserves was much higher in sort of the mid 1990s. It's now come down and then it's coming back up. But you also mentioned the point about the trade account. And here you will see the renminbi play a much more active role because it's part of China's sort of trade development. And so one has to distinguish, frankly, why do people hold gold? Why do they hold crypto as a form of sort of libertarian anxiety? In crypto, at the end of the day, you usually have to come back into regular currency. So the key point, really, from your question is look, the dollar has been an extraordinary advantage for the United States. People get used to it. It certainly helped our financing. On the other hand, from the trade account, it means that sometimes the value of the dollar is higher than some of our exporters or importers would want. That's one of the issues that the Trump administration claims it's going to be trying to sort. But this really comes back a lot to the issue that we talked about with debt and, frankly, how the United States is perceived around the world. The dollar strength is partly really because of the strength of U.S. capital markets, the liquidity, the depth, the rule of law in the system. As you start to undermine those things, well, people are going to look for alternatives. They won't find it immediately, but it's a sense of what you were raising about the degradation of the system and what's going to replace it.
All right, as our final question today, Bob, and I wonder what's the one risk that you think that the world leaders are still overlooking that might come back to haunt us in the months and years ahead?
Well, the biggest risk, if you put all this together, is that it's a system that is in flux. I mean, you now have Russia. For 40 or 50 years, the idea that you would conquer another territory and that would be acceptable in the international system, that was ruled out of bounds. So you've got sort of Russian aggression. You've got the Chinese sort of U.S. conflict. You've got the trading system. And what it all leads to is the system of cooperation that the U.S. led in building, first with allies, but also with other partners, is weakening. And so I was at the World Bank at the time of the global financial crisis. If you have another crisis like that, you will not have the cooperative response. This is in the news today with, say, like Fed swap lines, which were very important in that period. So we're running greater risks, and the insurance policies of U.S. leadership and the system we built are weakening. And so the real challenge here is number one, for the US to recognize its costs for itself. And second, around the world, people will have to make alternative plans, but they can't ignore the US because it's big and influential and innovative. So that system's going to have to be remade. It won't go back to the way it was in the past, but I also hope it won't look like 1900.
All right, we'll be watching closely on how that all plays out. Robert Zoellick, Chairman of the Americas at Temasek, former President of the World Bank, and U.S. Trade Representative. Thank you so much for joining us today.
Glad to be with you.
Our audience has gotten their shot of informational espresso and is ready to tackle the day. Missed a live episode? Catch the replay on our website, LinkedIn, or on YouTube. You can also listen to the call's podcast edition on Apple, Spotify, or wherever you get your podcasts. Thank you to our members for joining us. This has been The Call, brought to you by the Global Intelligence Desk, asking the right questions to navigate uncertain times.